And that decline in business investment prompted a number of economists today to trim their forecasts for first quarter growth, which the government is due to report next week. And that report is the most widely followed measure of U.S. economic health. But a comprehensive look at first quarter data over the past 30 years conducted by Steve Liesman shows there may be a big problem with those numbers, a trend that some economists have confirmed.
The latest tracking data show another weak first quarter on tap, as low as 1% given what we know so far. Will it be a coincidence that it's another weak first quarter? CNBC went back to 1985 and did a detailed review of 30 years of gross domestic product data. It's the most followed measure of growth in the United States. We found what looks to be a substantial and persistent problem in the data.
We found average first quarter GDP is just 1.87% compared to 2.7% overall over the 30-year period. 6 of the 10 worst quarters over the 30-year period since 1985 were first quarters. And since 2010, first quarters look like another economy altogether, averaging just 0.62% versus 2.3% over that time.
Here's what the average is for all 4 quarters of growth over the past 30 years. You can see the first quarter lags substantially, and the second quarter picks up some of that growth, but not all of it.
And it's not just a question of what's happened in the last 4 years. The most compelling part is that Q1 has systematically looked different than the other quarters over the past, I'd say, 25, 30 years. That's not something that seasonal adjustment should do. So there's a real puzzle here. I hope the folks at the BEA are going to dig in, figure out exactly what's going on and why.
The BEA, or the Bureau of Economic Analysis, is the government agency that publishes the GDP report. They said they're looking into, quote, residual seasonality, or the possibility that they may not be adequately adjusting the data for regular patterns. The CNBC analysis shows the Q1 effect holds whether the economy is in expansion or in recession. The potential for the Q1 effect to be depressing data right now is significant. Fed officials are considering rate hikes, and some have suggested the recent Q1 weakness gives them pause. Investors are faced with the issue of whether the economy is really weakening or should they be banking on a second quarter rebound. For Nightly Business Report, I'm Steve Liesman.